All right, traders, we're looking at a daily vertical bar chart of MEET, M-E-E-T, and now we're looking at a little bit larger time frame. This is 18 months as opposed to the year that I've been looking at, just so we can kind of see where we are. So we've been isolating this area, and this looks like it's been accumulation. We have a nice little selling climax. We never really built a lot of cause to build a downward price objective. So preliminary support, selling climax, automatic reaction, secondary test, there's our stopping action, absorption of supply. The volume contracts from phase B to phase C, which looks like this was the area here. Thought maybe we're seeing, a jump across the creek, sign of strength, but it broke back down. And it broke back down because these upthrusts areas, upthrust actions are actually a bearish change in character. And actually the wave volume that you showed a large buying wave and a lower volume wave. That was a clue that there's no more participation and prices are going to break down. So that would have been helpful to look at. I just don't have that available for equities. So from a long perspective, it looks like we have a higher low. So it looks like bulls are kind of anxious and buying pretty early. It looks like we've kind of consolidated here. We broke out of the range and we're back testing it. So this may be, and we're back testing it, there's not a lot of supply. So it looks like this is small accumulation. This is our jump across the creek or back testing it. We may rally into these moving averages that are present. I like the RSI if I hadn't said that already. We don't have any gross kind of bullish relative strength, but the sectors in the index are doing pretty well. And one of the reasons I stay bullish is because we are maintaining that 50% retracement there. So there's good technical strength that's present. But additionally, you can see this big bearish breakdown on a lot of volume, and a subsequent breakdown was on less volume. So I'm a little biased that we're going to rally into the moving averages and then break back down and just kind of retest support until there's no more supply. And when there's no more supply, prices will rally, and then shorts will habitually just short the resistance here, and they'll get squeezed and push us through a resistance. We'll back test, and then that's when we'll go into these price objectives that are present. Now this could be a deeper terminal shakeout, so we could see prices break back down, and so long as there's no selling volume, then that would be the reassurance to go ahead and buy that with the anticipation that it would recover. But if it broke back down, I would wait for that spring to develop. I'd wait for prices to recover and come back into this range and then consolidate on there. And if selling's light, then I would certainly get long, or I'd add to an existing position with the understanding that it would trade higher into the objective.